In today's video, I am going to be breaking down Bank of America and their stock, and if it's a good buy right now. I remember way back many years ago that Jim Cramer said that Bank of America makes a killing when there's an interest rate hike, and it still is the case today. They make a killing off of interest, and interest rates are rising. So what does that really tell us? Well, let's check out the first part of this stock and kind of break it down and see if we can make some money on this. So at the time of recording this video, it is $31.70 per share. Currently has a 2.78% dividend, and its average volume is through the roof at 39 million shares traded per day, and the current volume of the past trading day was 58 million shares. Its PE ratio is 9.9, which is, in my opinion, a bit low for an American bank, and even if it's a Canadian bank, it's still kind of low, which means that it's technically kind of cheap. However, if we look at the earnings and the financials, we can really break down if this stock is a good buy right now. Over the past 3 quarters, it's had 1 miss and 2 massive beats. Its revenue versus earnings are also pretty darn strong. In fact, its revenue is some of its highest ever, and same as its earnings. Its previous year revenue versus earnings, revenue was $93.71 billion, while the actual earnings, that's the actual money that they're making, is $31.98 billion. That's a heck of a lot of money. Versus its previous best year in 2018, which was when I was investing in the stock, and over the years after that as well, $87.7 billion with an earnings of $28.15 billion. Now, just as a full disclaimer, I do not directly own Bank of America stock right now. I sold out of my positions about a year or so ago, or maybe about 9 months ago when the stock price was doing extremely well. And while I may own this in some ETFs, it's still a very good stock to own because, as I was mentioning, interest rates are rising. If we look at the 1-year chart, it has been declining over the past 8 or so months. It has slightly stabled off, which is quite promising. However, we are now testing those highs that they were having back in 2018-2019. If we look at its max chart, which is going back into the 70s, we can see that they've had some tough periods versus what they were doing before, and usually when there's some massive recessions, they take some massive hits. We've seen that here as well as here. So what does that actually tell us? Well, if we look at the time earlier, back when interest rates were rising to really high levels, their stock price was increasing. And then there was that recession there, and then another recession there. However, in previous times when interest rates were rising, their stock was generally rising as well. So what does that really tell us? That tells us that if there's a recession, which in my opinion we are currently in, then the stock should be going down, which would be technically a good time to buy. However, we're in a recession where they're raising interest rates at the same time. This seems like a bad time to buy pretty much any stock. However, most of the loans in Canada are insured, while in the States, not too sure. I need to look into that. But when it comes to Bank of America, unless there's a drastic worldwide recession, which seems to be right now, and their earnings are still doing really well, then we might be a good time to start potentially buying some. It's an interesting factor. Their dividends have also been rising. They did recently raise their dividend in September. However, if we look back to 2012, 2014, 2011, even 2009, they lowered their dividend. They were pretty much forced to 1 cent a share. Unlike a Canadian bank, they have had to lower their dividends. The big 6 Canadian banks have never lowered their dividend for well over 100 years. They've gone through multiple recessions, and they've always came out on top. Now, when you start comparing as a Canadian, should I invest in Bank of America versus a Canadian bank like TD, CIBC, BMO, whatever, the Canadian banks seem to be a little bit more stable when you look back 100 plus years. While American banks are not regulated as much as Canadian banks, the government doesn't back them up as much as Canadian banks, which then means it's a bit riskier of an investment. However, there are ways of playing it while buying it in a recession and then selling it while times are good. Anyways, I hope that you've enjoyed today's video. If you have, hit that like button, subscribe, and I'll see you guys again next time.